Okay. So what we are introducing you to is the concept or the basics of the double entry, system. Okay. The double entry system. That's the introduction of it, and you can write down somewhere. So double entry system in accounting is one of the rules or the principles that we follow when we are recording the transactions. Okay. Every time we are recording the transactions, we make sure that we follow this. And the rule says, this is what the rule says. Our rule says, the double entry rule, each transaction or every transaction has got two sides. Okay. Every transaction has got what? Two sides involved. There are two sides involved of every transaction. Number one, you find that every transaction has got, for it to be called a transaction, it should involve two parties. There should be the party that is giving in the transaction, and there should be the party that is receiving. Okay. So now, what do you do? The rule says, or the principle states, credit the giving account and debit the receiving account. Is that clear up to here?
Yes, sir.
Yes. So you credit the giving account, the account that is giving, you credit it. Then the one that is receiving, you do what? You debit it. Simple. So whenever you read the transaction, you should identify the two accounts in the transaction. Two accounts have to be identified. The first account has to be the giving account. Then the other one has to be receiving in every transaction that you read. And so what you do, the rule says, if you read, you find that one account is giving, that account which is giving, you have to credit it. And the one that is receiving cash has to be debited. That is what is happening, or that is what is supposed to be done. And so in this conversation, I will now quickly introduce you to the common nominal accounts that you have. Most of the time, I've stated that, it's that issue where you have to make sure that you have the giving account, right? And the receiving account. But what is most important is to you to learn the common accounts that we are usually having. And the following are the accounts. And write down the accounts. The names of the accounts, I'll go through them one by one and slowly but sure. Number one, we have got what is known as the cash account, right? The cash account. By the way, this is a shortcut of account. The cash account. Okay. You have the cash account. You have written the cash account?
Yes, sir.
Yes. Now, what about the cash account? The cash account is an account. Okay. It is an account where you record, write down. So it is an account, right? An account where you record all cash transactions. You got that? Write down. It is an account where you record all cash what? transactions. All the cash transactions are recorded in what is known as the cash account. The other account that we usually have is what is known as the bank account. I've talked about the bank account. Yeah. What about the bank account? Have you finished writing the cash account?
Yes, sir.
Okay. So let me write like this. The bank account, which is actually number 2. It's where you record all the transactions that involve the bank. We call them the bank transactions. Those that involve checks, okay, yeah, they are recorded in the what? In the bank account. So the business will have the cash account. The business will have the bank account. This is very important to notice. These are the common accounts that belong to the business, okay? They do belong to the business. The business has got the following accounts. Most of the times, these are the common accounts that are involved. Okay. And the other account that we have is what is known as the receivables, the trade receivables account. Okay. It is an account where you record all the transactions that involve credit sales. That's the trade receivables account. Okay. You call the name of the account the trade receivables account. The account where you record all the cash, all the credit, the transactions that involve the credit sales. So that is to say, if you, for example, sell on credit to your customers, the kind of account that you open is called the receivables account. It is showing us the amounts of money that your customers owe you, okay? The amount of money that your customers owe you. Tell me when you're done writing so that we move on.
I'm done, sir.
All right. Hoping that you are writing, and that is very important. Then we also have another account, and write down this account. The name of the account is called the payables account. The payables account. And what about the payables account? This is an account where you record all the transactions that involve credit purchases, okay? Involving credit purchases. So involving credit purchases. So that is to say, when you purchase from your suppliers on credit, right? You happen to buy from your suppliers on what? On credit. You have to record, that transaction into what is known as the payables account. That's very important. So significant, very important. Write down such a transaction in the payables account. It is indicating the amount of money that you owe your suppliers. That's supplied to you on credit. Is that clear?
Yes, sir.
Exactly. That is very, very important. Okay. It's very important. There is another account. Okay. The other account that we have is what we call the expenses account. Now, the expenses account, this is an account, or these are accounts actually. There are many because usually they carry the name of an expense. So they involve, expenses. For example, I'll write an example so that you understand. Expenses of the business, e.g., rent account. Okay. Salaries account. Salaries account. Okay. Among others. So these are accounts for the names of the expenses. Okay. The names of the expenses. Please write down those accounts. They are usually there as well. Different accounts. Is that clear?
Yes, sir.
You copy everything and you write. When you're done with the expenses account, you have what is known as the motor vehicles. The motor vehicles account. Motor vehicles account is an account that involves what? The business that involves buying or selling of, of cars into the business. Okay. Remember, the business usually has got the vehicles. There are some vehicles that belong to the business, the cars. Okay. So whenever the business buys a car for the business, regardless of the name of the car or what, the brand, that is recorded in the motor vehicles account. So there is such an account. We call that account as the motor vehicles account. Write down. It's very important to write down.
I've done, sir.
All right. The other account that we have is what is known as the purchases account. Now, the purchases account refers to the account that involves the business buying goods. Okay. Either on, when the business buys goods for resale. Okay. When the business buys goods for what? For resale. You record that in what is known as the purchases account. Name of the account is called the what? Purchases account. This is where you record all the transactions that involve the business buying goods for resale. Okay. And once the business buys the goods for resale, you record such a transaction in the purchases account. Is that clear?
Yes, sir.
Tell me when you're done writing that.
I'm done.
Sales account. Yeah, I'll need to see those notes, so it's very important that please you write. Sales account. Okay. Sales account. What about sales account? This one, it is an account that involves the business selling, okay? That involves the business selling. That involves sales, in short. If the business sells the goods, okay, once the business sells, makes a sale, you record that in the sales account. Yeah. Of course, the cash sales, these are just cash sales, okay? The cash sales. Because I said the credit sales, they are recorded in the receivables account. So there is a sales account as well. Sales account. Have you written about the sales account?
Yes, sir.
Then there is what we call a withdrawals account. Now, a withdrawals account is an account that involves the owner withdrawing the money from the business, withdrawing money or property from the business for personal use. It involves the owner withdrawing money or property from the business for what? For personal use. This is an account. So the business is withdrawing what? Money or property from, or sorry, the owner of the business is withdrawing money from the business or is withdrawing some property or some asset from the business for personal use. You know, that is an account in person. Yeah. The owner withdrawing money or property from the business for his own use. And if that is the case, then such a transaction is recorded in the withdrawals account. The other one is called the purchases account. The purchases account. This is an account that involves, the owner, oh, not the purchase. We have already written about purchases account, the capital account. So the capital account involves the owner with the owner contributing or adding money or property to the business. To the business. Okay? This is the account. An account where you record all the transactions that involve the owner contributing money or property to the business. He contributes some property to the business so that the property belongs to the business. So for that money to become for the business, that's called capital. Is that clear?
Yes, sir.
Yeah. So basically, these are the major accounts that we usually have. Of course, there are many other, but at least these are good to, we are good to go. If you know these, they can at least take you somewhere. Have a very good day. See you next time.